Should you hold your investments during market volatility? Well, the answer depends on basically what are you invested in. If you're invested in a bunch of high risk stuff, probably not, because losses in investments are exponential. So the further your portfolio goes down, the harder it is to dig out. So it's actually much easier to prevent losses than it is to gains. So as the guru of investing has often said, Warren Buffett's quote, rule number one of investing, don't lose money. Rule number two, see rule number one. So if you're invested aggressively, you might want to reconsider your portfolio while it's now volatile. If you're invested in things like a robo-advisor, you also may want to consider what your risk allocation is in there, as well as whether it's something that you can hold for the long time. Because right now in robo-advisors and a lot of traditional asset allocations, they use bonds as a hedge against risk, which I think we're entering a time period where bonds are not going to be much hedge on risk. And actually we're in a period where we're in the worst bond market in 100 years. So if you're in a portfolio where your stocks and bonds and that's your risk protection, well, right now you have no risk protection. So that may be worth considering looking at changing your portfolio. If you're in it for the long term, by long term I mean decades, not 6 months, then you probably are fine to write it out. But again, losses are exponential. So the further and further your portfolio goes down, the harder and harder it is going to be to recover. So step number one is, can your portfolio sustain to where you can prevent those losses in that portfolio? Cheers.